Hello and welcome to the ASB Investment Podcast, the show that keeps you up to date on the markets and helps you make smart choices with your investments. These are entirely our own views and that of our guests. It's not investment advice, but we know plenty of experts at ASB that will be happy to chat if you need. Welcome to a new show we're trying out for kind of landing in and around the end of the week. We normally do the ASB Investment Podcast with guests lined up, tackling big topics, whether that's interviews, your history, life stage, wisdom, myths and legends as we've done recently as well, plus the sort of regular rotating guests. But we're trying something different now as well. In and around Fridays, we know that Fridays is kind of the wrap up of what's happened in the week, but we want to, cap off each week with a bit of a recap on what's happened, short and sharp, 10 to 15 minutes on key things. So we're calling it Fridays with Frank, disclaimer, or little print with Nigel, because we're financial services and we like the fine print. So it's Fridays with Frank and Nigel. And we'll keep riffing and iterating on this as we go each week, but we're trying to bring it out on a Friday so it sets you up for date night on Friday night to look good with your potential significant other half of the future. So welcome, Frank. You're joining us from, is it Queenstown or Wanaka?
No, from Wellington today. So,
Wellington.
Like always through in the country, Nigel.
Oh, God. Hopefully the listeners can know that it's a bit of a, I was surprised by that. Normally I know where you are, but Wellington I did not know. So, Frank, I guess we're going to get rid of the pleasantries. We're just going to get straight into it. I guess three kind of key topics or thereabouts, seeing where it goes. What are the big three things? What's the first thing that's been on your mind this week with what's been happening in markets?
Well, I think the biggie, and the Financial Times really captured this really well in an article they wrote this week, talking about the paradox of 2026. And I think it's a great way to think about this strange dynamic where we're all worried about what's going on in the Middle East. We're worried about oil. We're worried about can we fill up our car each week? But yet the US share market and share markets generally are performing really strong. And in fact, the US share market has been hitting all-time highs in recent days. And it just seems like such a paradox from the news that we're reading, yet the market's incredibly strong. So that's I think the number one thing on my mind at the moment.
Is this normal? Like the headlines don't represent what's actually going, the market, there's a dislocation. Is that normal or is this time different?
Yeah, look, it is somewhat normal. So the market tends to be much earlier to reflect risks than the real world, and similarly much earlier to come out of concerns about those real risks than the normal world. So it tends to be quicker to go in and quicker to come out. But I will say this time around, that disconnect, given that we're still a lot of uncertainty around what's happening in Iran, that disconnect does feel pretty jarring for market participants.
Because normally, notwithstanding the severity of it, but normally you it's a crude analogy, but you buy conflict, right? Like you sort of, if you're investing, markets will see through it. It's generally a short-lived thing, right? This has been no exception.
Yeah, that's true. Although I think the interesting wrinkle here from a kind of real-world perspective is that there's still a lot of uncertainty about how this plays out. I think you put your sort of common sense hat on and there's enough murmurings to think that there's real incentive on both sides of the conflict to work their way through it. But yet we know that it is a tinderbox and either mistakes or changes in policy could still change the outcome. So, yeah, there's still enough residual risk there that I think it's wise to be cautious about it, but yet markets have put that caution to one side.
The market where it is obviously it's caught a sniff of something else, right? So is that, like we're right in US earnings season. I think the next batch of local Aussie earnings season, it's a quarterly versus 6 monthly down here, is kind of, I think, at around May potentially. So that's not that, but, what's the US market focused on? Are companies really, are they going gangbusters, are they?
Yeah, this is a good reminder that fundamentals really matter. And the most important fundamentals for the share market are how profitable are companies, what are their earnings, are they making good money? And the answer for now is that profit results are really, really strong. So we're in the first quarter profit results for US companies. Profits are up something like 27% based on the companies that are reported to date. The outlook statements, whilst there are notes of caution in the outlooks for companies, anyone tied into the AI trade, technology, incredibly bullish outlook. So that, I guess, that confidence that we're seeing from companies and the profitability they're demonstrating has been more than enough to offset the worries that are coming from the Middle East.
I guess, is that earnings performance, like, is AI in the earnings for these for all companies, or is it sort of more the overall earnings performance has been driven by a pocket of the market who's laying the concrete, putting the servers on top of it and putting the chips in?
Definitely, that's where the biggest pool of profitability is in the infrastructure and the chips, the semiconductors, and we can talk about semiconductors because that's been an absolutely fascinating space. But in the hyperscaler, so the real primary and secondary kind of drivers of the AI revolution. But I think increasingly we're seeing companies talk about real changes they're making in their businesses to adopt this technology, to use it to drive out costs, to improve productivity. And so we're starting to see it really leak into those tertiary beneficiaries, normal operating companies doing normal things, but finding efficiencies from AI and using that to drive profitability. So very much the former and secondary, but we really are seeing evidence that it's having a much broader effect now.
And is there because you and I, when you're in Auckland, we always talk sort of next to each other at desks about where it's flowing through to, and you're always reminding that it's not necessarily just these magnificent 7 companies who kind of get a lot of the limelight as such. Are there pockets that you're finding this wave flowing into that you like on first, I guess, view didn't think that would flow through to? Is there anything that stands out?
Yeah, I think I touched on those semiconductor stocks before, and we've known about the likes of NVIDIA, so the core GPUs that are running these models, but we're seeing a secondary benefit in the semiconductor stocks, and that's been the most exciting part of the market has been the memory stocks. So companies like Samsung, Micron Technologies, where just the demand for high bandwidth memory because of AI is incredibly high. That's meant they've stopped producing some of the traditional memory chips they produce. So that's created a real shortage in that space. So unbelievable performance from the memory companies. Even the real laggards like Intel that have been a bit of a dinosaur, that's now being seen as the sort of TSMC of the West, and that's really caught a massive bid. So the stock's up, I think, 5 times from its lows now. So that sort of pretty arcane part of the market, the semis, has been a phenomenal area of strength in recent times.
This morning on financial TV that I was watching, as one does early in the morning, like it crystallized it for me. I haven't really thought about it. Like all these, your queries you're flowing through your phone or your model that you use have to be stored somewhere, and that is memory. So I was kind of like, oh yeah. I mean, right. I know it's pretty 101, but when you think about it like that, it's not just the GPU or graphic processing unit that's doing it. It's actually memory, right? And it needs to be held somewhere.
Absolutely. And there's a subtlety to that. It has to be very high speed, specialized memory. And there's only a handful of companies in the world that can produce this. And turns out they can sell that memory for more than they can sell traditional lower speed memory to other people. So that's crowding out that. So you're getting these kind of strange dynamics in the marketplace. Semis has been an area that's been incredibly cyclical recently, historically, but now companies are doing long-term contracts to buy access to it because they've got so much demand for high-speed memory that they're prepared to really commit to buying it over long-term contracts. So quite a lot of changes below the surface, but that's fueled a real rally in that area of the market. That's helped with earnings, and that's helped push the market back to all-time highs.
And I guess long-term listeners, to the show, I guess will remember us talking about megaforces, right, for a long time. Is this just the realization of that megaforce coming true, right? Like digitization, AI, geopolitical fragmentation, onshoring of supply stuff. Is this just it basically all wrapped up in a bow perfectly, is it?
Absolutely. And I think, again, a reminder, and we talked about this when the conflict in Iran kicked off, just a reminder that the world does continue, and whilst the market might be very focused on the topic of the day, as we talked about on that podcast, the other mega forces will continue, and you can't take your eye off that ball. So being positioned not just for the thing that's the market's obsessed about right now, but making sure that you've got the right irons in the fire for the broader trends that are going on is really important. And that's been, it's obviously been very important in delivering good returns in our portfolios over the last month or so.
So someone's sitting there on their Friday going, cool, that's great. Thanks for all those acronyms and stuff that I might not understand. What does it actually mean for me? I guess, so is there anything we've been doing or think we need to do, in the portfolios as such, with everything going on because of, that thematic?
Yeah, like I do apologise for some of the acronyms in that last conversation, but super, super interesting. But look, the key for us is we've kept our portfolios pretty consistent through the course of the Iran crisis, obviously aware of some of the risks that were that were beginning to unfold, but also conscious of the sort of opportunities that the AI hypercycle are bringing towards us, conscious of some of the other mega trends that we've got. So for us, staying the course has really been the right call. It's been sort of vindicated in outcomes that have been delivered. And I think the thing that's really kind of impressed me through this period of volatility is that, generally speaking, clients have really engaged. They've asked these sorts of questions, but people have really stuck with their investments over this time, and they have really been rewarded with good returns by having that level of patience and that acceptance of volatility. So I think I'm seeing, for me at least anyway, a kind of maturing in New Zealand investors as they learn to kind of embrace volatility, understand that these things generally do pass, and continue on and build their wealth. So yeah, really, I guess a really nice reflection on how New Zealand investors are handling difficult times.
I was thinking about this morning. We've had a lot of V-shaped sort of market movements, right? Big event sells off, we're back pushing through new highs. We haven't really had a multi-year kind of those slow grinding bear markets as such. Do you think, I guess, Frank, you've had different hats over your years. That maturity you're talking about, is there something you think that's happened that's forced Kiwis to be a bit more resilient when it comes to investing? Or are they, just with more money, they look at things in a different way?
Yeah, and I guess, and I'm always very cautious about this, that the recency bias does tend to teach people lessons that sometimes don't always stand the test of time. And you're right, for the last more than a decade now, we've had some quite sharp sell-offs, but they have had very sharp rebounds as well. So maybe we are being informed by those lessons. There is a caution that comes with that, and that is that there can be times where markets are more difficult for more extended periods of time. And so, delineating between the likelihood of those very sharp rebounds versus markets that will be more grinding and more difficult for long periods of time, it is important that we stay awake and cognizant of that risk. We obviously think about it when we're building portfolios, but for investors, being cognizant of those environments can still happen, and managing your wealth accordingly is really important. What are the things to look for in that? It's recessions. Ultimately, the thing that drives more difficult, longer term, more grinding bear markets is economic recessions. So if you get an adjustment, it's short and sharp, it doesn't result in a recession, you tend to get short, sharp share price movements. If you get prolonged recessions, that's when you tend to get those more prolonged and tricky bear markets.
Yeah, when the demand gets destructed, that's what you got to look out for, I guess. Thinking ahead for the next few days, I guess was between Fridays now as we're doing this and the weekend coming up, one thing I'll be looking at is the so-called peace plan. This feels like it's gone from kind of like tracing paper that you do your baking with to actually more substantive paper now, and just seeing how that realizes itself or not. Is that an actual thing? Frank, is that what you'll be looking at, or will there be something else?
Yeah, so I think we're all watching that really closely, listening to our Resters Politics podcasts and make sure we understand the machinations of that process. The other thing for me is the balance of the US reporting season. So we've had about 2/3 of companies report to date. There's still a third to go. Really seeing if these positive earning trends continue. Very carefully looking at the comments and outlook that management teams have to understand kind of what risks they're seeing, what opportunities they're seeing, how they're using AI in their business, and what that tells us about the balance of the year. So very much reporting seasons are great. It's a little bit like you're getting your report card from school when you're a kid. It's a great chance for us to get a really good temperature gauge on what's actually going on in US business.
And sometimes, I guess, like as Frank, we always talk about, sometimes it's best to, depends how far down the rabbit hole you want to go. Like if it's a company and you're interested in investing, read what they're saying at their half year or quarter to give you a flavour of what it's actually happening. Sometimes there's a real dislocation at the moment between like overall the sky is falling or a customer or a consumer sentiment survey versus maybe what a company's reporting. So that if you're looking for an insight into what's actually happening, maybe do both rather than just kind of the overall mood is a bit somber.
Do type into your Chat GPT or Gemini, give me some great quotes about the reporting season. It's a really good way to get a very quick monitor of what's going on. So yeah, that's certainly one thing I'm doing over the next week.
All right, so thanks for joining us today, Frank, from Wellington. You're all over the country. How long are you in Wellington for? A few days? Or
back tomorrow down to the deep south, but it's going to be the game of Fridays with Frank is somewhere new each time for the conversations. So cool. We can make that the starter.
It's like we're in the world of Carmen San Diego. Thanks for joining us, mate. We'll see you. We'll obviously be talking all the time, but I'll see you next week on here. And thanks to you all for joining us for our new little format show. Frank and I do really want, in our rotating guest, if there's someone subbing in, we really do want to hear from you what we're going to talk about. So if there's something during the week that's happened that you want a little bit of explanation, a 101, you want to know what's happening in the area where Frank is, who knows? I guess if you can forerun that and think where he's going to be, predict where he's going to be like a game show, let us know at podcasts@asb.co.nz. So we really do want to hear from that, and we'll just tailor things and answers like a mailbag as such. We hope this sets you up for looking smart this weekend. That's our whole intent. Short, sharp, enough to set you up, whether it's your portfolio you're thinking about or just looking smart at the dinner table. See you next Friday. Cheers. Thanks for listening to the ASB Investment Podcast. If you have any thoughts on this episode, or if there's anything you'd like us to discuss on a future show, get in touch with us at podcasts@asb.co.nz.